why retaining Dangote Cement stock in my portfolio. Some days ago, somebody was asking me, why is it that you are here to sell your Dangote Cement stock? We bought it early January. I told the person I have several reasons why I'm still retaining the stocks in my portfolio. And that was exactly what necessitated me shooting this video this very hour. Now, we have what is called NGS30. NGS30. When you hear NGS30, we are talking about 30 most capitalized company quoted in the Nigeria Exchange Group. They are company with higher market capitalization. And the company with the highest market capitalization today is Nigeria Health, above 16 trillion, followed by MTN. MTN hit above 10 trillion last week Friday in the Nigeria equity market. And the most valuable, the third most valuable stocks in the Nigeria Exchange Group is Dangote Cement with market cap of 8.76 trillion. Now, let's look at one of the reasons why I'm here to sell the Dangote Cement stock. The first one is what is called price to earning growth ratio. Now, when you calculate the price to earning growth ratio of Dangote Cement, the formula of calculating the price to earning growth ratio is simply your PE ratio divided by your earning per share growth. And the PE ratio of Dangote Cement is 10.7, while the earning per share growth is 36.9. When you divide this, you have 0.3x. This 0.3x means that the price to earning growth ratio of Dangote Cement stock is less than y. By the rule of thumb, it's less than 1. And when it is less than 1, it means the stock is grossly undervalued. When your answer is 1, we say it is fairly valued. And when it is above 1, it means the stock is an overvalued stock. How much are they selling Dangote Cement? As of today, Dangote Cement is 577 naira. Now, what this price to earning ratio means is that even when you are paying 577 naira per unit of Dangote Cement stock, it means you are even buying it at a lower price. It's an undervalued stocks because the PE, the price to growth ratio is less than 1.3x, which means it's an undervalued stock, grossly undervalued. Now, we have 3 ways by which a share can be issued. Look at it. A share can be sold at what is called at par. We have at discount. We have at premium. Now, if a company is selling share at par, let's say the share is 1 naira, and the company is also selling that share for you at 1 naira. It means the share has been issued at par. Now, the same thing if the share of a company is issued at the rate of 1 naira, but the company decides to sell for you at the rate of 0.95, which means you are buying the share at a discount lesser than the face value. Now, a share of a company who's supposed to be 1 naira, maybe you are now buying 1 naira 25 kobo. This has been issued at premium. So, which means when you are buying Dangote at 577 naira, it means this share price is going for you at what is called at a discount. It's lesser than the base value. So what this price to growth ratio, what it shows us is to determine if a stock of a company is an undervalued stock or an overvalued stock. But as far as Dangote Cement stock is concerned, this is an undervalued stock, grossly undervalued, based on the price to growth ratio that is less than 0.3x. And that's one of the reasons why I'm still retaining that stock in my portfolio. Now, number 2, dividend growth stock. We have different types of stocks in Nigeria Exchange Group. You can have a penny stock, you have a dividend growth stock, you have a defensive stock. But in terms of the Dangote Cement, it is called a dividend growth stock. Why do we call it a dividend growth stock? It is a dividend growth stock because when you are buying these shares, you are certain of collecting dividend at the end of accounting period. We have some companies in Nigeria, they are regarded as a dividend king. A company like UBA, like Seni, they pay their dividend twice in a year, and that's why they are regarded as a dividend growth stock. The same thing applicable to Dangote Cement. Dangote Cement, I think last 3 months, they declared dividend of $30 per unit for their shareholders. And that makes it to be a dividend growth stock, which means apart from you enjoy what is called a capital appreciation on the shares of Dangote, you are certain of collecting what we call a dividend, which is part of the company's profit that has been declared for the shareholder. And that's one of the reasons why I'm still keeping it. And I've collected my dividend of Dangote Cement stock this year. Now, the third reason why I'm still keeping the stocks in my portfolio while the rest of my friends have sold their own is because of what we call impressive financial results. The fundamental of Dangote Cement is very, very sound. Their statement of account, their financial statement is okay. Healthy financial statement. Now, look at it. In Q1 2025, that is the first 3 months between January to March, the revenue of Dangote is now around 94.7 billion. That's the first 3 months in this year. Then between April to June, again, another 3 months, which is second quarter, look at the revenue, 1.08 trillion. That's one. Look at profit after tax. In first 3 months in 2025, 209.2 billion. Now, Q2 result came out last week. What do we have? 311.21 billion. This is a growth trajectory. Now, look at earnings per share. Here, in the first 3 months this year, is 12.29. Now, this is 18.44. Which means if this company is to pay dividend again, they are going to pay more than 39, which they have paid earlier this year. And that is when the company is having a sound fundamental, a good financial statement, then there is no need for me to hurry to sell the shares because I knew that the company is on a growth trajectory. And that's another reason why I'm still keeping it in my portfolio. The next one is future growth. Now, what do I mean by say future growth? Dangote Cement stock is having growth potential. There is a potential for growth in this company. Look at the Q1 and Q2 results. They also release the Q3 results. By the time the Q3 result come out, I'm sure it's going to be more or higher than the Q2 results. So only that alone will make me to still keep the stocks in my position because the company have the potential for growth. Now, the next one is the nature of the products. What do they produce? Cement. Cement is not only being used for construction of road or bridges. They equally use cement for building of houses, residential buildings, companies, schools. We use cement to do a lot of things. And there is nobody that will say, because of the fact that the price of the cement is ascending, then therefore we are not going to buy cement again. We are not going to construct road. I'm not going to build house again because the price of cement is ascending. No, nobody will say that. You still buy it. So which means cement is more or less an inelastic product. And being an inelastic product, it means whether you like it or not, you will still buy, provided you are building house. Government will still use it for construction of road. We want to build school, we still buy cement. So which means such a company is equally benefiting from what is called economic event. And I love to buy a stocks, apart from a stock being fundamentally sound. When I realize that a stock is benefiting from government, from economic event, I tend to hide under such a company. Look at MTN. As at November last year, MTN was trading around 169 naira 90 kobo. By January 2025, government approved 50% tariff hike for the MTN. I knew the implication because when the tariff is hike for a company, technically it means the price of the product of that company has gone up. I key into the MTN the moment I realized that MTN want to benefit from economic event, which is the tariff. And how much is MTN today? 480 naira. Something of 169. As at January it was 210. But today is 489. You can see the massive capital appreciation on the MTN. So when a stock is benefiting from economic event, I tend to hide under such a company. Apart from that one, we have what is called, in fact, this is the major reason why I'm here to execute the sale order of my Dangote stock. What we call a resistance region. Now, look at it. A resistance region from the technical analysis is a region in which the price of the security will no longer rise further. Okay, let me explain this way. And February 2024, that's February 16, 2024, Dangote Cement stock attained 52-week all-time high of 63 naira. Look at it. That's February 16th, 2024. This is the highest price that security attained, and that is a major resistance region. This is a major resistance region, because this region you are seeing now, at this region the price begin to dip again. So a price that has been attained, when the price of that region will no longer rise further, that is a resistance region. A resistance region usually created by the seller as a result of selling pressure. It is the seller that usually creates a resistance region. So this is we have a multiple resistance region for Dangote Cement stock, but the major resistance region when the price refuses to rise further is 763 naira. It was at this 17 naira that the price began to dip, even down to like 430. Now look at what is happening now. This resistance region is yet to be tested in 2025. Now, how much are they selling the stock? It closed today at 577 naira. Now, with this sound fundamental that this company is having, and I'm waiting for this stock, Dangote Cement stock, to retest this last year resistance region. So two things happen at the resistance region. If the price attain this resistance region, if it tests this resistance region, good. It's also possible for the price to break out of resistance region. If the price break out of resistance region, it means the seller, the buyer, have taken control of the market. Only God know the price at which it will stop. But as of now, the Dangote Cement stock is yet to test the resistance region. This is a region that was created by the seller last year. Look at what happened. I think last week, Sovereign Trust Insurance broke out of resistance region. You know, I entered Sovereign Trust Insurance at rate of 1 naira 30 kobo. January 2025, the stock entered resistance region at 1 naira 59 kobo, and the price began to dip. I entered a few months ago when it was 1 naira 30 kobo, and I was watching it from the technical analysis. I was waiting for this stock to test this resistance region. I told some of my clients that the moment this stock was able to touch the resistance region, then two things happen at the resistance region. Either it break out of resistance, and if it break out of resistance region, it means it can even top 2 naira. Just last week here, this stock crossed the resistance region and closed around 2 naira 7 kobo before the price dip. I think today it closed at 1 naira 88 kobo. So this resistance region that was created by Sovereign Insurance in January 2025, now it has become a support region now because it has crossed the resistance region. The same thing applicable to Dangote Cement stock. Is yet to test the resistance region of last year, the major resistance region of 763 naira. So if it tests it this year, I may sell at this level. It's also possible that I break out of this level. If you break out of this resistance region, it means the buyer have taken control of the market. Now, it is the seller that creates a resistance region, because a lot of people are having the stocks in their hands. So there's a need for them to take a profit. They need to sell. So when the seller dominates the market, they will bring down the price of security. But when the buyer hijack the market, then they will push the price upward. So I'm here to say, these are the reasons why I'm here to sell the stocks of Dangote Cement, because it's yet to test the resistance region. At this junction, let's call it a day. Thank you.